with media. The New York Times reporting earnings this morning, 11 cents per share. This is on an adjusted basis that beat Wall Street estimates of 5 cents per share. Joining me now on the phone for some reaction and in our best-in-class segment is a top-ranked analyst who covers the Times, Ed Atorino of Benchmark. Ed, good to have you with us to react to this. And these are better than expected numbers, but you're still seeing the Times talking about a decline in print advertising, down 12%.
Yeah, well, while things are getting better, they're getting better faster, but the fact is the industry is still showing negative numbers. And based on my numbers, they're a little bit better than expected, not spectacularly so. But overall, pretty good. For example, I had a $583 million revenue estimate. They did $588. I had a $44 million operating profit. They had lower costs. There is a big tax adjustment, and they actually hit their my EPS number exactly on target. But overall, very encouraging quarter, going in the right direction. But net, as we've seen across the newspaper segment, they're heading toward flat, but got a way to go yet.
A way to go. I mean, when are we going to see this recovery back to normal?
We're seeing a, quote, recovery, unquote, in the sense that the rate of decline is getting better. But, you've asked the key question. Are we going to see, let's say we look out to the second half, are we going to see single-digit declines? Can we see, a flat fourth quarter? Can we see some sign that 2011 can be better? At the moment, all we're seeing is less worse, if you want to be cynical about it.
Right, we're seeing less worse, but what I was going to ask you, Ed, was about print advertising. When are we going to see that recovery take hold? I understand that the recovery is taking hold, but what I mean is that when are we going to get back to normal levels?
Well, we don't know. That's the wild card. And what will new normal be? You've had such a collapse in classified, for example, with employment, help wanted in real estate and auto. A lot of that business may be gone forever, and there may be a new norm. But I think by the fourth quarter we could see, hopefully, low single-digit declines and possibly, quote unquote, maybe a flat fourth quarter. But at the moment, we're seeing progress.
Then where does that leave the New York Times and where does that leave them exactly? Because they're recovering, but it may not be as fast as some would like. Where does that...
Actually, I think it's faster than Wall Street would have thought. I mean, if you go back a couple of months, I don't think any of us had 10% plugged in for the first quarter. We probably had higher loss. So the rate of decline has improved faster than at least I thought it would. And so it's going in the right direction. But my crystal ball doesn't tell me when things are going to get, but I think by the fourth quarter, the possibility we could see flat numbers. But at the moment, we're heading in the right direction, but we're not there yet.
But flat's not going to cut it in terms of seeing a catalyst for the stock price. So where does that leave the New York Times then?
Well, the stock has done pretty well as the market has decided the newspapers aren't going out of business yet, and so people are making a bet that things are going to get progressively better. And we're going to see some kind of turnaround eventually. If that was not the case, I think the stock could be half the price. But it is going in the right direction.
Okay. All right, Ed, good to talk with you. Ed Atorino, analyst at Benchmark, talking about the New York Times.